Hello, investors. It is Connor Bates, Associate Portfolio Manager with Revere Asset Management. Today is Wednesday, April 16th, 5:06 p.m. Eastern Time. Coming to you with tonight's Revere Roundup Daily Market Insight video. Market state, we are still in a harsh correction, and that's been the case for a couple weeks now. And if we take a look at the trend gauge here, we added that little yellow sub arrow yesterday, and quickly that is taken back off. Market leaders still red arrow, lacking themes, lacking participation, just lacking leaders, really, to say the least. And any stocks that have been holding up well got sold into a lot today. Some bright spots, but the big picture, just not a healthy environment for growth stocks right now. Short term, we're below the 21 EMA and we found resistance at the 8 today. Medium term, we're red arrow as well, trading below the 50-day moving average. And then long term, still below that 200-day moving average. And we mentioned last week, we did get that death cross. Todd went over some great stats on sometimes what those look like. So what happened today? Well, kind of a lot to talk about. There was Nvda chip restrictions plus Hawkish Powell. And overnight, there was Nvda announced that it expects Q1 results to include up to 5.5 billion of charges associated with H20 products due to export restrictions for China. And then AMD also announced an expected impact of 800 million, and Nvidia fell 10% today. Semiconductors across the board were down, and it's when a stock or asset class is in a stage 4 downtrend, bad news tends to come more frequently. And then Hawkish Powell, this is what kind of fueled the selling intraday today in the interview. And some highlights from this was that Fed Chair Powell, who appeared at an event in Chicago, indicated that he doesn't think the Fed will make progress on its dual mandate goals this year and that there isn't a Fed put. So not instilling much confidence. And some other notable headlines, he said, economic impact of tariffs likely larger than expected. Effects of policy will likely move the Fed away from its goals. The tariff shock pushes towards higher unemployment, higher inflation. And that is kind of what sparked the waterfall intraday, and definitely not instilling much confidence for market participants. So that's that. Here are the final numbers. Big 8 down 3.67%, RG8 down 1.81%, S&P down 2.24%, RSP down 1.28%, QQQ down 3.02%, Equal Weight down 2.16%, Dow Jones Industrial Average down 1.73%, mid caps down 1.12%, Russell 2000 down about 1%, 60/40 stock and bond down 0.84%, and GROTECTION down 0.68%. Alrighty, let's get into the tale of the tape as usual. And we'll start with the chart of the S&P 500. So I kind of talked about those negative news catalysts today. Just not good. And when you look at this chart, we got that debt. I'm not going to call it a dead cat bounce, but that's what it's starting to look like. But got that rally up into the 21-day, rejected, now back below the 8. And if you look at it, common trajectory that indexes or stocks like to follow is a 3 waves down pattern. So you have your first leg down here, you had your rally back up into the 200-day and fell. This was your second leg down, right? Rally back up into the 21-day and fell. And now it looks like we potentially might be heading lower. But obviously 5120, those are those lows from here. That's an important level, along with 5,000, and then also these lows down here from the reversal day. So keep those levels on watch, but objectively not looking great. And especially just from a stage analysis perspective, right? We're trading below a 10, 20, 30, 40-week moving average. That is risk off. And then also those 2021 highs, which coincides with the lows right there, be an important spot. RSP, similar spot, kind of, bear flag. We'll see if pans out by rejecting the 8 and 21. QQQ, similar thing. First leg down, weak rally into declining 200 day. Second leg down, weak rally up into the 21 and closing below the 8 EMA. We'll take a look at the weekly here as well. Again, stage analysis perspective, trading below a 10, 20, 30, and 40-week moving average is definitely risk off. Mag 7 continue to be weak. Apple, Nvda, Tesla, no bid whatsoever today. Dow Jones rejected the 21 and falling through to the downside. Mid cap, similar thing. Bear flag, maybe not, but we'll see. That's what it's looking like for right now. Could invalidate and move back up, but again, lots of overhead up here in supply. Russell 2000, minor relative strength today is the news on the semiconductors and Nvda exaggerated the selling on tech, and the IWM Russell 2000 only finished down about 1%. ARC, again, kind of similar with the Russell 2000, only down 3% today. FFTY, similar thing, actually closed down 0.98%. And there was a select few leaders that held up decent, but the big picture still just not enough participation. The VIX coming back up, back over 30. It was looking like it was going to break 30 intraday, and then it found support right there and rallied back up. So really want to see this below 30 and then ideally below 25 and 20 to see that volatility dampen and get a much smoother trend. It's still a super volatile market, and the Q's been closing down around 4% today. It didn't feel that crazy, but if you're in a bull market and the Q's are down 4% in a day, that's a huge move. So that's just is a testament to how volatile this markets are, and how you're starting to get used to it. The dollar again below 100. Gold, just unbelievable move. This is the best place to be in the market right now. Another massive day, another gap up, closed up 3.25% today, over 300. Short-term extended, but just take a look at the monthly 10-year cup and handle pattern has led to a very big move, and obviously had that really strong move in 2024, and then it's put in this really nice multi-week base. And then once it broke out, this has been a really strong trend. And if you look at some of the individual gold miner stocks, these are starting to go a little bit parabolic. But, a lot of people are rotating into gold. And if you look at commitment of traders data, it's really not that crowded as a long position. So this could have some room higher, and it just remains the best theme in the market. Miners, again, really accelerating up here, so might need a pause. Silver starting to try to play catch up to gold back below the 50-day. Bitcoin, some relative strength here today, closed green on the day, has this declining 50-day to work with, but kind of taking out this downtrend line from the highs. And this is one of the few that held a rising 40-week moving average, as you can see. So if the market starts to bounce, Bitcoin's been holding up really well, double bottom off the 200-day. So keep watching this for clues. Bonds coming back up into the 200-day. TLT, same thing. Found support at these lows down here, and that coincides with rates rejecting these highs and starting to head lower. TNX as well. Alrighty, that's the inter-asset correlation. Let's take a look at the tail of the tape. Let's see. So percent stocks above the 5-day moving average. That was at 91 the other day. And now that's all the way back to 25. So definitely some overbought, short-term overbought conditions worked off. The news, I mentioned the news, Netflix reports earnings tomorrow. So that's another one to watch out for. First name in big tech to kick off the earnings season again. So that should be a good, just be a good thing to see if it gets bought up or if it gets sold off. Today's keys, we were watching the S&P and the Qs versus the 8 and 21 EMA, two red arrows there, rejected both levels. And then looking for leadership or a follow-through day. Does not look like we're going to get a follow-through day, and leadership is pretty non-existent right now. And then going into Thursday, last trading day of the week, we're watching, same levels, 8 EMA and 21 EMA. See how the leaders hold up, and then that 4-9 low that day, that was the biggest up day, one of the biggest up days in the history. So see if that low can hold. That's obviously a very wide barred candle. Day count down one day back below the 8, 16 days below the 21. Expectations still remain negative. And then let's see, sectors wise, gold, silver, metals and mining, energy, Bitcoin, basically all commodities and Bitcoin. And then weakness, semiconductors on the chip restrictions, tech very weak as well. IGV, software, home builders, and financials, just not much strength whatsoever today. GROTECTION sold Palantir today on that negative reversal, and then also trim the SPLG position. RVAB is 0.10, balance at risks minus 0.29%. And you can see from our RVAB what our thoughts are on the market. That basically tells you everything you need to know. Holding a lot of cash, money markets, and just it's not a favorable period right now to be a bull. There's headline risk both ways. Even on the short side, any sign, any positive catalyst that Trump says could send the market up higher, like we saw last week on that, near double-digit day gain intraday for the Nasdaq. So definitely a time to just be more so observing, being patient, and when the times get better, it will be pretty obvious. Bottom line, Nvda chip restrictions and hawkish Powell send the market lower. Let's take a look at some charts of interest. Alrighty, let's start with Palantir, right? This was one of the best names holding up and, doesn't look horrible, but rejected that pivot here, couldn't get back above 100 and closed the day down almost 6%. Still watching this. This likely needs some more time. And one thing to consider is some of these double bottom bases, you can look at them as a double bottom base, or, this is a stage 3, stage 4 base in a topping pattern. So we'll let price tell us the answer to that, but kind of two scenarios that we're looking at. Take a look at like a CrowdStrike, again, another one in a double bottom base, but the price action is just very wide and loose, erratic. So just not clean setups and not seeing tightness. But if some of these charts can start to get tight, hold above the 50-day, let those moving averages slopes start to curl back up, that'd be very positive. Spotify is another one. Double bottom base here, and this one's getting a little tighter, right? This one's starting to form a tight formation here. So this can get back above this downtrend line and 50-day. This one could be a really good leader. And RS line new highs. That's notable in this type of market. Netflix, this one's looking pretty constructive heading into earnings tomorrow. Let's see, RBRK, this is another cybersecurity double bottom base holding up pretty well. Has this declining 50-day to work with. Carvana, this is higher beta, but again, all these moving averages are getting pretty coiled. This one looks like it's gearing up for a move either to the upside or the downside. Nvidia, let's take a look on that chip restrictions. So closed the day down 7%. At one point, it was down almost 10%. Did close back above that 100 level, but again, continues to make lower highs below declining 50 and 200 day. The 50-day is below the 200 day. So semiconductors are going to go higher. They're certainly going to need a lot more time. Obviously, Nvidia is a very important stock for the market, so we keep an eye on it. But in terms of actionable setups, not even close. Stocks, semiconductors, again, continue to make lower highs below all declining moving averages. And like I mentioned earlier in the video, when an asset class or stock is in the stage 4 downtrend, it's very common to see a lot of negative headlines come out. And vice versa, when a stock's in a stage 2 uptrend, you just, being holding long, you get rewarded with positive catalysts. And it's just kind of funny how that works, how sometimes price lines up so well with news because this was pretty oversold, got its bounce right into the 21-day, and then negative news hits and gaps this sector lower. And then again, if the Nasdaq wants to go higher, we need to see some participation in some of the big mega cap tech. Apple, same thing, continues to make lower highs below all declining moving averages. Tesla, this one got kind of hammered today, down 5%. And just to give you a picture of some, around here is when Powell started talking and you saw that waterfall, but a lot of things got some pretty strong closes. So we'll see if that's meaningful. But, this had like 4 tight inside days resolving lower. This one also reports earnings in 6 days as well, so that will be a good sign. Some other ones, some military stocks are strong. NOC, RS line new highs. Let's see, there is RTX. This is another one basing at the highs. Lockheed is laggard as well. And then Katos, this is another one. Relative strength line new highs, forming a really nice base. So still keeping the watch list ready of names that are holding up well. Axon in the security space, trying to build a tight range here above the 50-day. Looks fine, but again, very choppy, very loose, erratic, not clean bases. So to me, that tells me these likely need just some more time. Bitcoin was strong today. MSTR, one of the better looking charts in the market right now. Double bottom base off the 200-day, getting tight above that 50-day. Moving average starting to slope back up. So if Bitcoin goes, this looks like the best proxy to play, as in the tail end of 2024. This one really led Bitcoin higher and went on a huge move, from low mid hundreds all the way up to $543. Another name that looks decent is Eat. This is a food stock and got a downtrend line here. But really, any name, sometimes in a weak market, names that hold up and then you label them as relative strength, sometimes they're just the last to get hit, especially when the market is so weak below all declining moving averages. So, tougher to buy individual names in this market. So, but nevertheless, still keep an eye on many of them and keeping the list ready if the market starts to turn around. And then I'll just end with that. You can see, like I showed with Tesla, but this is when, got this pop here and then faded all of that. And then this is when Powell started to speak and really accelerated to the downside and close, but not bad close, rallying back up. But again, very volatile. You can see the 60-minute, see if this 5,200 level holds going to finish off the week. So kind of the same message, not a whole lot to say, not as exciting as a bull market, but basically, keeping an eye on relative strength, being patient, trading less size, and just in protection mode right now. So that is all I have for you guys tonight. As always, if you want to reach out, you can email me at connor@revereasset.com, or you're always welcome to reach out to me on X at ConnorJBates_, and then you can reach out to Dan or Don at revereasset.com. Phone is 855-REAL-WEALTH, 855-732-5932. And if you're ever interested in becoming a client, as always, please reach out. And that is going to wrap it for Wednesday, April 16th, 2025. This is Connor Bates with Revere Asset Management. Telling it like it is. Always appreciate everyone that tunes in every night, and have a great night.